InvestorStream is delighted to have 180 Markets on board for its market analysis. And joining me today is 180 Markets Co-Founder Shaun Factor to help us delve into the mind of a 708 investor. Shaun, welcome to InvestorStream.
Thanks, Alex. Thanks for having us.
Now, Shaun, the ASX has been under some considerable pressure of late, heading into the end of the financial year as central banks look to combat inflation. Against that backdrop, how is this environment impacting share placements?
Yeah, look, it's definitely having a big impact, but maybe just before that, I guess we've got to all remember that this inflation is a repercussion of all the good times we had. Investors really benefited from all the extra printing of money all around the world, and that after COVID, I think that was really necessary. But there was always going to be an economic fallout or something that as a consequence of that. And inflation, unfortunately, is really now getting a little bit out of control. So for anyone that made good money in the last few years, unfortunately, it all evens out economically at the end, and interest rates have to be put up now just to control the inflation. So it is unfortunate that interest rates are going up, and obviously we all loved a bull market and low interest rates environment. Yeah, we just now need to control this inflation, and we'll get through it, and markets are terrible now. So it is having a big impact now on share placements. So the market, as most people know, is not great. And I was actually having a conversation with a mate on the weekend who deals in the market, and I just said to him, if you think the market's bad, take a look at small and micro caps. And that's where that's an area that we're dealing with, 180 Markets. We study small caps, and it is not great. Anyone left holding something that probably went up a lot over the last few years is now feeling the pain. Everything has really fallen out there. There's a lot of pain, and unfortunately there's probably a lot more pain to come. This environment, I've seen it many times before. The good times can never go on, and now this is a consequence, and we've got to deal with it while it's here. Unfortunately, to do a placement now is really hard. We probably seeing one placement a day now in the market, whereas I'd say 6 months ago, and for the 2 years before that, there was probably 2 or 3 a day. And our investors are just not participating a lot in placements, which is to be expected. People are trying to get out of the market and not in. Yeah, look, it's pretty challenging and not fun.
Okay, so are you seeing some sectors are slowing down more than others while other sectors keep bubbling away?
No, not really. Unfortunately, what happens is it's like a flow-on effect. So you get one sector getting beaten down, and then people need to get money out of other sectors. Maybe they were up on certain stuff and then they start selling. So this is across the board. I still think there's a lot of shares that are overvalued. Like a lot of them went up multiple times over the last 2 years, especially lithium stocks. Now, I know lithium, the price is still pretty strong, but there's certain stocks out there that went up multiple times just based on all the euphoria and all the spare money on the side. So look, unfortunately, I'm pretty bearish. I mean, I guess when I look at the screens every day, that's what it does to you. I see red, and the extra falls that we see in small caps, a lot of people probably don't see, because like today the market's up and a lot of stocks are up, but there's no volume in any of the small caps. So a lot of sectors were strong up until, say, 6 weeks ago. There's really not one sector at the moment that's better than another. So unfortunately, you just can't go out and pick a sector that you think that there's going to get a lot of attention to, because it's just so far widespread. It's not fun at all, but hopefully things will change and we can at least see a bottom soon. But I think a lot of investors don't want to go and pick that bottom, and they don't want to put extra money in now, because like if you add onto positions now, it feels like every day is worse and worse. So yeah, it's not great at the moment.
So in the current market, what feedback has the 180 team been getting from its 708 investor base and broker partners?
Am I allowed to swear on here? Because it's basically, we'll give them a call and they'll tell us to F off, basically. Yeah, not as bad as that. Yeah, the guys that we'd call when we were trying to raise money 6 months ago are like, guys, I've lost a lot of money recently. I'm not putting any more money into the market. The average hunter who made good money has lost a lot of money recently, and they are not coming back into the market. As I said before, things are going lower and lower, and there's no confidence at all. There are still a few which haven't lost as much as others that are still bidding on placements. And obviously new people to the market think it's cheap, but people that are experienced and have seen this market before, I mean, you can't try and catch a falling knife because that sort of feels like at the moment. It's hard to know. Like the other thing is with tax loss selling, it's adding a lot of extra falls on now. A lot of people who are selling are not buying back. There is getting a lot more money on the sidelines, but that's not coming back in anytime soon. I think for our guys to start participating again, I think we'd need at least a month of stability or at least upward swings. But when you wake up and the US debt is down 2 to 3% and it keeps happening at least twice a week, it's not great for the smaller punter out there.
So are you seeing any investors trying to take advantage of the downturn?
I'm not seeing it. I know I try and I lose more money doing that. Like I often say to the guys and girl, it's hard to sit in front of the screen a lot because you think things are cheap, but then they're cheaper the next day. So our guys aren't really there yet. In terms of placements, what we saw straight after COVID, we're not really seeing yet. There were a lot of really desperate companies that had to raise then and doing it at big discounts. We haven't seen a lot of that yet. Most of the companies that still are raising, their share prices have been not as bad as others. I mean, we're still speaking to a lot of companies because a lot of companies come to us to help raise money and we just can't do it at the moment. We're not going to go and try raise money for a company when we know that our investors aren't going to be interested. So we do speak a lot to different investors and at the moment, there's just no appetite for share placements. It's pretty hard for companies now that need to raise money because you've got to discount your price more than you would have needed to a few months ago. That was happening after COVID. And a lot of people that were willing to back these companies straight after COVID made great money because they were ballsy. They were buying when the market was falling. And I mean, historically, you can make a lot of money doing that. But I know our guys would rather wait for the bottom and then miss out on maybe the first 10 to 15% and then just get a bit more reassurance that the market's better.
So how are the current market conditions changing the way 180 markets execute general equity capital markets activities such as share placements?
When we speak to companies, it used to be, yeah, we'll do you a placement, raise you $2 to $3 million and we'll get them the money the money will be raised in 24 to 48 hours. Now it's more about a plan. You're going to have to do an SPP or rights issue with a placement. And maybe don't do a placement now. If you've got supportive shareholders, go to them and get them to commit and then maybe do a rights issue instead of a placement. And we're also talking about alternative structures, big convertible notes, other sort of finance that hasn't been done in the past 2 years. The company needs to be flexible now as well. It was so easy for them raising money in the last 2 years. I think they all forgot that when you need to raise money, it's not as easy as Core 180 Markets will do it for you that night because in the good times we can, but right now it's a lot harder. And me, myself as an investor, I've got to be very confident that the selling's done in companies and we're buying into a sector that's not going to continue to be beaten down. Also, we've done a few convertible notes recently and they weren't done a lot in the good times. So we're doing quite a few of them now where it's a different sort of structure to how we used to do it. And company directors need to be pretty financially savvy to understand them. You speak to a lot of company directors who are geologists and all they know is share placement and rights issue. They don't understand the rest of alternative structures that are available. It's a lot harder for them as well as investors and brokers as well. Yeah, I mean, the companies will survive this and do well out of this, more so the companies that don't need the funds now. It's really hard for companies that are desperate now to raise money.
And so what sort of different strategies do you need to deploy in order to execute these sorts of activities?
Yeah, sure. I'll give you an example of something different. And it wasn't us, it was another broker that was raising money. So it's pretty complicated, but I think it's a good example of why you can't just go into a placement anytime. So a company, I won't say names as well, but a company was trading at 0.1 offer, which is pretty much the lowest of low. The company knew that the only way to raise capital was to do a consolidation, but it couldn't do a placement because a consolidation hadn't happened and investors weren't going to try and speculate on the price the company was going to relist at. So we spoke to the lead brokers and we decided to help them with a convertible note. The convertible note needed approval from shareholders and the company was going to do consolidation as well. We've got quite a few investors that like these alternative structures because they know that it can work out well for investors and can also work well for the company. So we helped structure it in a way that was very investor friendly, provides investors with reassurances that they'll be able to still make money. It wasn't a placement, but investors will be able to kind of choose their own placements in the future. So we had to speak to management quite a bit, negotiate a bit, and the convertible note was done. So this is very different to a few months ago where we'd go and speak to management in the morning, do a capital raise at night, and they return to trade the next day. They know that they'll get the money 3 days later. There's a lot more work involved now from both brokers, companies, and then to get investors around the story. We enjoy it. I mean, obviously we enjoy a better market, but we enjoy helping companies when we can, even if it's not a traditional method. We're always looking at ways we can help companies and investors as well with different sort of structures. I think there's going to be more of this to come where you've got to think about different ways of helping companies and ways that investors can benefit too.
Brilliant. Look, thanks, Shaun. Really appreciate you joining me today and look forward to more insights from yourself and the 180 Markets team in the future.
Thanks. Enjoy the warm weather in Perth. It's not great in Melbourne.